Hey there, happy Thursday traders. This is Trader Tim from eMoneyMind.com. Today is April 20th, 2017. I wanted to do a recap of the trades from this morning. As we were talking about in the room on Tuesday, coming down to the apex in this series of lower highs and higher lows. We're getting tighter and tighter, and today could be the day, could be that break that starts are trending higher, but we'll need to break the 2369 level, that 61.8, to really get us moving. If we just come up to this 2360 and roll over again, well, then it'll just be another lower high put in and a move to continue the consolidation. But what I wanted to talk to you about today is kind of my rundown of the morning and my thought process I used for the trade. So I started on my 512 tick chart. I always find it interesting. I like to look at, the previous days trading hours only related to today. So this dotted vertical line here on the left is yesterday and the right is today. And so I start the morning just pulling from lows of yesterday's close to highs, and that gave us a 23.37, kind of a line in the sand. If I were to just zoom in and pull back, this is what the morning looked like. I just drew that up as soon as we established a high and started pulling back. Not to take it as a blind limit necessarily, but just to identify where a potential reversal is. The first setup of the day was actually a short setup that happened 15 minutes after the bell, from highs to lows, 23.40 50s, selling off down almost to that long, that 23.37. So we tested the 50, sold off a little bit, retested, and then got our break. So a couple points, kind of small, but traded right to the negative 23% target. Now, you might be saying, well, why not take the next short setup here? The reason being, this long traded before the short setup. So whether or not you took or tried to take the long at 37s, which, like I said, I'm just using it as a line in the sand, but when it reacts at that level, that's essentially the long trading before the short, so that negates the short. So whichever setup trades first is the one that you want to take. So rather than trying to get into the blind limit down here, I just let the market establish that level and bounce. Once we break the previous swing high, you can take the very first 512 tick chart setup. So low to high, we pulled back 23.3950, and then that one traded again up to the target and through as well. From here, drawing up the next setup from lows to highs, market pulled back to the 50, had a little bit of a bounce, but then rolled over. So that was essentially the first stop of the morning. From here, we didn't make it all the way to the negative 23% target, but we broke that anchor's high. So it's okay to go ahead and draw from lows to highs. Now, you don't have to take that as a blind limit. If we trade entry to target, then taking the next setup as a blind limit makes a lot of sense. You've got hedge funds, automated trading firms, computers that are using those anchors. There's traders out there that have found those levels valid, and so the likelihood that there's follow-through to continue is very high. But in this case, you can wait, just like I did back here, let the level establish itself and take the first smaller 512 off of that level. First 512 after a 15 is the concept that I talk about in my book. So if we were to follow that same method, we broke the prior swing high, can draw from lows to highs. I'll get rid of some of these lines to clean it up. And the 23.42s traded, dipped in a couple of ticks, and then that trade was on its way. And the way to manage the trade, just like I talk about if you're trading two contracts or any multiple greater than one, taking the first off at the negative 23 and then trailing the second. Now, below us we had, so that 37s had its target. We had the long above that at 41s had its target above us, and then the very small setup at 42s that had its target above us. So a lot of things pointing to a continuation at this moment. So trying to stay in the trade as long as possible is always the goal, especially in these situations. So what I like to do, if I draw up that very small entry at 42s, taking the first one off at negative 23 if you've got one, and then the second one, you can trail each candle's low, in which case it took you up to the 61.8 and then popped you out just above the negative 23. You can also trail swings, which in a time like this is very valuable because the market can, at the beginning of its trend, can really start to run. So the way that works is leaving your stop alone at -6. Once we make a new high, pull back, and then make another new high, you can take your stop from the -6 and move it up underneath the next swing low. Now you'll notice there's a little more distance between the two stop movements. If you wait for the market to make a new high, pull back, make another new high, bring your stop up to 23.50s. That's a big distance, 45s to 50s. But you can stay in the trades for much, much longer. If you want to use a mixed combination of that, a variable, you could start by trailing swings, trailing the first swing, if you will. And then once that one begins to break out, then you could start trailing each candle's low once the candle makes a new high, and try to hang on that way. Or you could trail the first swing, and then you could set a trail stop of 2 points when we get moving really quickly, or some variation. I mean, at that point, you've got a good amount of profit locked in, and so just trying to capitalize by letting the trade run as long as possible and staying in it as long as possible is, the most profitable approach. The nice thing about, let's say you were trading two contracts, you took one off at the negative 23 and you trailed the swing, so your stop was essentially at the negative 23 in this case. You've got that profit locked in, so that should help your patience and the psyche to let the trade continue to run. Even though your stop's down here at 45s, the trade's continuing to run, and when it pulls back and makes a new high, I mean, boom, you can move your stop all the way up to 50s and really lock in a lot of profit. So that's kind of how I approach every trading day and a walk through today's trades. If you want to see things in real time, we do a live trading room on Tuesday. You can get the info for that, eMoneyMind.com/VIP. I've also got other trading videos and trades over at eMoneyMind.com. You just click on the videos tab. And I hope you all have a great weekend, and we will talk to you soon.